All right, everyone, here we are with ticker symbol Dkng, Draftkings Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. So Draftkings has actually been on its way down. It broke through support today, and it's still staying below the 50-day moving average. So let's go ahead and move our supports and resistance to their new locations so that we can see the importance for tomorrow and also see what is going on with this chart. So currently the resistance level is slightly above the closing price. I mean, it's literally right there on the T almost. And if it breaks through that, obviously the next point would be the 50-day moving average. And after that, the next resistance level way up here at 43.80. So I'd write that down. 43.80 is an important number because that's the highest point reached in the day before this continued to fall. Now, we're going to look at this closely so that we can go ahead and be aware of where this is going and have a sense of direction of what is going on with the charts. So for the bulls to actually get up and get closer to the 50-day moving average, which the 50-day moving average is 42.98, I write that down. As long as we're below it, the bears are in control. And the moment we're above it, the bulls are gaining control. They need to break through the resistance of 42.01. If the bulls can break through 42.01, turn that into a support and pull away upwards to reach the 50-day moving average, they're getting closer to their goal. And by breaking through 42.01, it does not mean that the bulls have gained control. It is still in bearish territory, but it gives us as investors a sense of direction of where this is going. So 42.01 is the first step to build momentum and start a rally to work its way up to the 50-day moving average, crossing it, and then working its way up to the one resistance level, which is very important, 43.80, the highest point reached in the day before this continued to fall, for the bulls to start to work their way up back into bullish territory to newer highs. Now, on the other hand, we have what the bears want, and the bears are trying to continue to tear this down. Currently, they are doing a great job at it. I mean, if you look at the chart all the way since October 5th, and then again here October 14th, there was only a 2-3 day trajectory where the bulls were able to break the 50-day moving average, and it's been falling since. The bears are dominating this, and it's been breaking through the 50-day moving average by 30 minutes or 1 hour per day in the last 2 days, and that's about it. They haven't been able to stay above it. So the bears are going to try to continue to tear this down. Their next step is breaking through the support, and this is the lowest point reached in this bearish run. So this support level is important. That is 41.24. If the bears break through 41.24, this could start to hit newer lows and pull further away from the 50-day moving average. So I want to emphasize to all investors, pay close attention to how the stock is reacting and how quickly is it moving away from the 50-day moving average. Is it moving away from this support level if it breaks through it? Or is it hanging out sideways, giving a chance and an opportunity for the bulls to reappear and bring this one up? As always, I hope that these cues have you prepared for tomorrow's trading day. And if you feel encouraged or inclined to subscribe, please do so. And don't forget to click on the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart, and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.